Hello, warriors. Hi, Craig. Who's ready to fight some battles today? Put your war face on. So, everyone knows I've been still looking for a corrective narrative in the Dixie. We came off pretty good last night, and also Euro held support right down here. Okay, so I'm still going to give it time to play out. I still don't think this is a high. We took out this high. There is a little divergence, but still my contention. We have some lower levels to go in the dollar. Something that isn't actionable right now, but you may want to draw this line in. See that green line? So the yen hasn't done anything wrong yet except have one non-confirmation. All right, yeah. Here we go up here and see the reading. Okay, so we have one divergence, but this 1180-ish level right here, should the yen start closing, candles start closing back under that level, I think that you have the potential of this rally in the yen being over at least temporarily. So sometimes it's, in fact, it's always good to know a key technical area in the market, whether or not you're trading off of it now, but it could come into play later. And, we could still trade 113, if the S&Ps aren't done, although they're starting to approach some numbers of guys that I respect. One of our guests last week, Peter Goodburn, had a 29.25 number up there. He's an Elliotician. We'll see how that number plays out. For everyone, when you're trying to project tops using fibs and times, they're just educated guesses of where a market could go. Nothing's in stone, but I'm going to be paying attention to 29.25. How about you guys? And this is something that we've been talking about for a few days in the crude, that Steve talking about crude, and that we've had 1, 2, and now this is a third attempt to trigger and elect the buy stops over the high, which is 6464. I actually saw a count that it could roll over right from here. I'm just, it's hard for me, maybe it's my handle, Forex Stop Hunter, to believe that we're just going to roll over without shaking out the shorts one more time. We'll see. Should know within 48 hours. I will say this, there are a couple areas that are going to tell you crude's going to start looking not as positive. And the first one's a 63.80 level. And then, of course, we go back to the return line, right? And that's coming in a shade under yesterday's lows. So we start taking out yesterday's lows and trade back within the wedge line, which actually is a broadening top line, as you can see. Broadening top. So you have some levels in yen, and you have some levels in the crude to pay attention to. I want to congratulate the team and Blake and Steve's analysis yesterday. He was calling for 106.50 and Aussie Kiwi, and if you look at it, we went right to this when we were talking about it down here. I was thinking 107. Here we are. Couple of weekly moving averages here. I'm not saying it's over and it can't continue, but that's a nice windfall profit trade in a matter of 3 weeks, 4 weeks, and over 300 pips. So nothing wrong with going to the door on part of your position up here. I'm not saying short it. I'm just saying if you were long and had the patience to stay with it, there's absolutely nothing wrong with booking a profit here. Everyone with me? Also, I know there's some people talking about copper. I have a little different view. I was looking for copper to rally one more time towards 301. Here's your weekly chart. Back to that'll be 61.8 back of the big decline. And I thought it would do that with the S&Ps heading up towards its level. We'll see what RSI readings are, but I'm thinking there's could be a significant top actually developing here up around the $3 level. Of course, we could have an overthrow of this too, right? Just like we had one in the crude oil market, where you have your upper line or your lower line, depending upon if it's an uptrend or a downtrend or a rising or falling wedge, where you could take out the return line of that formation and have a throw over. So I'm looking for shorts between here and 61.8. I don't know what kind of formation to call this. You know, back here it looked like it might be a flag, and that failed. And then we had this attempt up here. So pretty good rejection off this line. So it rejected here, it rejected here. Let's see what happens at, you know, 299 to 61.8 in copper. Dr. Copper. Yes. Yeah. Well, that 1280. Yes, Steve had great patience, kept a piece. And if you notice, most of the guys do this. They're never all in, all out with an idea. So they piece in and they piece out. And you know why? Because you really can't expect perfection at the crap table. And it may happen once in a while where your entry and exit are pretty close to perfect. But even the best traders, that's more of the exception rather than the rule. So by spreading out your entries, you don't have to be perfect. It actually, if the market takes some time to develop for the move you're looking for, it gives you a chance to build that position. And then you don't have to be perfect on the exit and get out and then watch the market continue on without you, because you didn't take, you're not all in and you're not all out. So you book a piece, but you're still there. So if you haven't done it yet, why don't you give it a try? Say you're a one lot trader, just enter with a 0.3 on your first entry, and your full position would be 3 entries. Anyway, I would recommend you try it out, use low leverage to try it out, and see if that takes some of the pressure off you to have to be real precise on your entry, and your stops are too tight, and you end up getting taken out of the market, right the market, wrong the trade. So give that a shot. Hi, Blake, I hear you. Or somebody.
No, you didn't hear me, but now you do.
Yeah, I heard someone was.
That wasn't me.
Who is it? They have to go. They're in detention.
One me.
All right.
One me.
All right. You don't even need a note from your mom. I believe you.
No, continue on. I'm listening in.
Oh, okay. People are asking about gold, and Steve played it perfectly. I'm not sure if it was a pip or not, but here we are. You know, at the bottom of the descending triangle, looks like a breakdown. I would say if we still get that one more wave down in the dollar to 96, I don't think this is a bottom in gold. I would use it as a shorting opportunity. And yeah, you know, this could end up being a false breakdown, but you could have said the same thing in the dollar. So again, I would use any rally here in gold with a weak dollar, because a weak dollar really hasn't helped gold. We've had a few sessions where euro's been up and gold is still selling off. So that correlation isn't playing out one-to-one at all. But if the dollar does roll over and say we get a 114 euro, not a 117 euro, that might even change the picture in gold. But I think it's very viable before this is over in gold that we're looking at the daily moving average as a magnet around 1250. So we'll see. I know people looking for a lot lower numbers. I remember Greg up here talking about on Elliott formation that could take gold down to 1220 before and possibly getting a very big rally. The next rally should take us above 1400 if one of the counts that I've seen is correct. So, you continue to work the short side and probably get ready with back up your car and your truck between 1250 and 1220. Okay. Aussie yen, I'm going to save that for Steve to do the crosses. Okay, you're half long. Okay, Gerald, thanks for sharing. Okay, Blake.
Okay, Dale.
How are you?
Tired. Is it Friday yet? Is it Good Friday? Tomorrow, it's a shortened week this week.
Yeah, so that's good, Blake. And
That is.
get an extra day to sleep in. I don't know about you, Blake, but getting up this early when I have a chance to sleep in, I don't know. I can't. Does that happen to you? Or you're able
Yeah, I know. It takes me a few days to adjust. So yeah.
It's a biorhythm.
Yeah, biorhythm.
I feel like I slept in if I wake up at 5 a.m.
So last night we got, I want to talk about just a couple of things. First and foremost, let's talk about last night's Chinese data. Retail sales, industrial production numbers were beat. Let's take a look at what we got here. So if you can see right here, you can see industrial production numbers, retail sales numbers. Those are great. GDP numbers, slightly better than expected. China, whether you believe it or not, posted some pretty good data, and we continue to see the Chinese data improve, or you can even call it stabilization, because Chinese data has been pretty weak as of late, and it came in better than expected. So naturally, what you got was a move higher in the Aussie pairs. So if you're long the Aussie New Zealand, which I'm still long a piece of it, the fact of the matter is we hit the 50% retracement here, and you can see that relative strength is way out of control, overbought. So if you are long the Aussie New Zealand, you have to be really careful here. I was tempted just to take everything off, but I didn't want to, because I wanted to make sure I kept some on. I do think that now you're going to find buyers back down at dips now, back down at 106 and 106.25, and this is where I really want to be long, more. So if you get some sort of dip in the Aussie New Zealand, I'm going to try to get long down here and try to just establish a full size position around the 106, maybe a little lower than that, 106, 105.90 level. But the Aussie New Zealand, you can see we're struggling here at the 200-day moving average, which makes sense. I mean, it's been a great run. Ever since I put out that Real Vision piece, we have gone, from 104.20 to 107 and change. And if you look at, obviously if you're a ForexAnalytix subscriber, we have the 105 level, to where we're currently at around 107. I mean, it's a 200 pip move, and in this type of environment, it's a good move. I mean, it's a good move, and it's a good gain, especially when the majors are moving, to find some exotic currency pairs that are not your typical majors, or exotic cross rather. It's been a good gain. So hopefully you guys have been able to take advantage of that. Before I go into the Mexican peso, which I do want to discuss, I do want to talk about the Aussie dollar, which is, trading above or right at its 200-day moving average. It's right at the 200-day moving average, but you have to watch if risk appetite continues to improve. We have, this 7210, and if that breaks, then we're going to have some, obviously further gains here. But I want to show you something really quick, and this is going to be my focus today. Let's go over to this. Okay, so this is daily sentiment index. As you guys know, if you're ForexAnalytix subscriber, we try to work, this is a paid subscription that we have as a company. We try to work some of this into our analysis as well, because it tells you when the market's a little, aggressively bullish or aggressively bearish, or a little maybe overweighted bullish, overweighted bearish. When you're looking at a daily sentiment index, and this is the column that I tend to pay attention to. These are the previous days, but you can see when you get a reading above 80 or below 20, you start to get into extremes. And the S&P, the NASDAQ, Nikkei, and also peso are above 80, and they're at extremes. Well, another source of data that I tend to use, let me grab it for you really quick, which is free, and let me ask Dale, are you here, or did you step away from your keyboard? I'm not sure if he stepped away for a moment. Sounds like he probably did. I think he's talked to Adam from Movement Capital, but this website's a pretty good website when you're talking about COT data, or commitment of traders data. What you can see here is that on the Mexican peso, speculative index or speculative positioning is at high levels, and I've also read that that we are at historically high levels, but based on this, it looks like we have been higher. But what I'm trying to point out is the market is aggressively, as of last week, aggressively long the Mexican peso. All right, so when you take into account the DSI, all right, and you take into account where stocks are at, and you take into account the aggressive nature of the market being long pesos, meaning if you're long pesos, that means here, let me pull up a different chart really quick, one that's a little got less drawing on it, but I want to point this out. The market's aggressively long pesos, and the market is looking for a move lower. And obviously, if this alarm gets triggered, I think that you're gonna get some sort of capitulation type of move in the dollar Mexican peso. However, with stocks being a little overweighted from a bullish standpoint, and the Mexican peso also being a little overweighted from a speculation positioning and CFTC data standpoint and DSI, I'm thinking that at this stage in the game, that the dollar Mexican peso, as long as we trade above this 1880 level, the risk is that we might start to get a squeeze, especially if stocks start to pull back. And so I think that if you are watching the dollar Mexican peso, you want to start looking on, counter trend, which would be something like this. Now, does that mean the Mexican peso is going all the way back to 20? It would have to happen in order for that to happen. But I think that if you, from an intraday perspective, and if you're looking for something to do, trade today, the dollar Mexican peso might be an opportunity for you guys to take advantage of. Oops. Sorry, I've got the yawns today. I didn't sleep too well last night. It's an uncomfortable pillow that I was dealing with last night, apparently. One of the other pairs along the same lines of the Mexican peso or the dollar mex is the euro Mexican peso. And Chi, who is in our in our chat room, and he's a trader that I really enjoy having his company in our chat room because and I've met him in person in New York, and he lives in the New York City area. He's a great guy, first of all, but he also brings to the table a lot of great ideas. He's like, we were talking about the peso this morning, and he's like, yeah, I really like the Euro Mexican peso as well because of the market's short euros and also long pesos. The Euro Mexican peso might be a great opportunity, and it's something that I was paying attention to last week, because last week I actually bought the Euro Mexican peso right here as we were testing this 38% retracement. Now, the reason why this is important, let me show you this chart. So if this is a daily chart of the Euro Mexican peso. Now let me remove the fib level here, and if you just dismiss the fibs and you go, you were looking at it last week, you're looking at it going, oh crap, the Euro Mex is breaking down. And when it was breaking down, I was like, I'm not falling for that. And the reason why I'm not falling for that is because it was also at a 38% retracement. So last week I went long at 21. I think it was like 21.21 was where I was long, and I had to sit in it for a day, and then or it was like a couple days, and then it bounced back up to 21.30, and I scaled out of it because it was stalling. It was at the end of the day. I'm like, just take it off, which obviously I could have made a little bit more. But the fact of the matter is we're getting this pivot from this 38% retracement. Also, you take in the dollar Mexican peso and you go, well, we're holding a possible double bottom here. So if you're bullish the euro and you think the euro's eventually going over to 113.50, which I am, by the way, just so you guys know where my head's at, I actually think the euro is going to break higher. That doesn't mean it's going to. I'm just telling you that my opinion is that at this point, that's kind of my bias at the moment. I'm not long the euro, just letting you guys know. If the euro does do what I think it's going to do and starts getting above 113.50, and yet the dollar Mexican peso holds up, and we hold this double bottom, the place that we might want to be is the Euro Mexican peso, and that could be a really nice squeeze. But what I'm going to be looking for now is a move like this. And we have to get really above this, like what I would call the resistance zone. So above like 21.50, and I'm interested in a counter trend long Euro Mexican peso. And one other thing that I want to mention on top of this is that we do want to see equities start to show some signs of weakness. Now, if you look at the S&P, which I know Steve's probably going to cover this as well, but his charts look exactly like mine. We are in a potential ascending wedge, but we're brushed up against this resistance. So if we turn lower from here and we head back down towards 28.50, support, then I think that the Mexican peso pairs are going to get a lift. In other words, they're going to start to, see some selling pesos and covering up of euros and dollars. So that's kind of what I'm thinking right now with those particular pairs, and I think they're worth keeping on the radar, especially once equities open today. If equities start to show a little bit of profit taking at these levels, then I think those are great candidates for long trades. So those are some ideas for today, and if you want analysis on the rest of the currency pairs, especially the majors, make sure you visit ForexAnalytix, because this is where I do all the analysis during the week, especially the end of day data, or the end of day, updates. So when you're looking at the daily charts and you're cruising through all these majors, these end of day updates, sometimes it depends on the market. Like yesterday we had a lot of analysis here for the Aussie. It depends on the day, but that's where all my analysis is at throughout the course of the week. So if you want further analysis on the majors, make sure you visit us there. All right, and also one last thing I should mention before I turn it back over to Dale and Steve and Stelios. We have Canadian CPI coming out for those of you that trade the Canadian. But if you are looking for a broker to help subsidize your ForexAnalytix subscription, make sure you visit Forest Park FX. They are our sponsor for the FACE webinars, and they're just great people to work with. And if you live in the United States and you're like, well, I live in the US, I don't qualify for the reimbursement program, that's fine. You could, depending on what brokerage firm you use, you might be able to get some cashback rebates. So make sure you reach out to them. Their contact information is right here. They have Skype and email that goes directly to the guys at Forest Park FX. Steve, Stelios, how you guys doing today?
Good morning, mate.
Good morning.
Good morning.
Good. It's a nice sunny day today here in Athens. So.
All right. Well, that's a good thing, because you guys have been plagued with crappy weather, right?
Yeah. I have news for you. We don't have a sunny day here in the north suburbs, but you obviously still have one in the south suburbs.
Yeah, we do.
Yeah.
Oh, you Greeks! All right. Well, hey, I'm passing the screen over to you, Steve. And remember, you got CPI coming out of Canada here in just a couple minutes, which I know.
And we have trade balance. We also have trade balance both from the US and Canada.
All right. Well, good luck, everybody.
Thank you, Blake.
All right.
Okay. Thanks, before we get the numbers, a couple of things. First of all, what Blake mentioned, that we had the New Zealand CPI. It came in weaker than expected. Came in on a year-on-year basis at 1.5%. It was expected at 1.7, and that's down from 1.9 the previous reading. So it seems to be on a downward trend. So that obviously gave some weakness to the Kiwi overnight. And then we had the magical Chinese numbers, which again Blake talked about. They beat expectations. So that seemed to give a nice risk-on sentiment. The other important number, very important number we had today was from the UK, and it was CPI, which was expected to go up from 1.9% to 2% year on year. It stayed at 1.9%, yes, and as we talked about yesterday in this webinar, the gap between CPI and earnings growth is quite large. It's 1.9% versus 3.5%. So that's good news for the consumer, that's for sure. But overall, the numbers today out of the UK were a little bit weaker than expected, but nothing major. And Euro CPI came in at 1.4%, in line with expectations. And remember, the ECB have said that they see the short-term path for inflation to possibly go a little bit lower. So we're going to be monitoring that for sure. And yes, like you said, we have Canadian CPI, so might as well have a USD CAD on the chart. And yes, CAD news in 2 minutes. Yes, Tom. And what else? Nothing else happened really. We had actually, let's have a look at the numbers first. Hold on, it's 3 seconds.
Yeah, let's see. Canadian data and US data, as we said, trade balance actually.
CPI 1.9 year on year, as expected.
Indeed, Canadian CPI as expected, both month on month and year on year. US February trade balance a little bit better than expected.
Yes.
49.4 billion minus, of course, negative versus 53.4. So
Canadian again a little bit better than expected. So really, I'm guessing USD CAD is not doing much. Oh, it's on the trend line, isn't it?
It actually does. It actually moved lower, like 20 pips. I have no idea why, because the data, don't really support that. Of course, it's not that it's a huge move or anything. Currently testing this trend line support, this symmetrical triangle trend line support. Keep in mind that this symmetrical triangle is, can be found within this ascending channel. So even if we break this trend line, it's not that, this opens like the trapdoor to hell. Just opens, the possibility for a move towards 132.30. Of course, it's still 100 pips to the downside, but depends on your time frame. That might not be that much. So
Steve,
yeah.
you should trademark that new pattern, the trap door to hell. You should trademark that one.
Okay.
Yeah, otherwise there wasn't that much yesterday. I mean, we had some actually, for people who follow equities, we had some results from the banks and Morgan Stanley today. Citi was yesterday, day before yesterday, was it? Or yesterday. And they're all coming in roughly at expectations. So yeah, that's another thing to watch for sure. And I have not much else to say, I'm afraid.
Okay, Stelio. Okay, good. Okay, we'll don't worry. Chat will do all the talking. So as it seems, despite US and Canadian data not being really anything other than more or less expected, we do see CAD strengthening. So yeah, it is what it is. Actually, CAD strength accelerating here. If we penetrate this zone, as I said, 132.33, this little confluence here is the next level to monitor. I think that's actually going to be quite an important level, because this ascending channel has been keeping price action in check since the very beginning of this year. So it's a channel that's been working for like 4.5 months now. So it's not going to be easy for the market to crack through it. But okay, let's first confirm that we're getting a breakdown from here. Let's leave it a little bit more time. Now I'm going to start with the metals once again, and we'll move from there. Gold broke below and closed below 1280 yesterday. The price action following that, this little rebound, looks corrective to me. We actually got rejected from 1280 after retesting it as a resistance. So I'm still holding, of course, my short. I think there's a very decent chance that we're going to make it to the next area, which is at around 1265. Oversold readings in the 4-hour RSI also point to a bearish continuation. Don't forget that momentum oscillators should not be faded. They're more frequently better used in order for you to confirm the direction of the trend other than anything else. And the second way you can use them, in my opinion, is to spot divergences. So divergences in momentum in combination with other signals are also good trading signals themselves. Speaking of which, let's also fib extend this rebound. So we see implied fib target the downside as well. So if we go to fib extensions, as you see, very nice confluence of supports. The 161.8% extension of that last rebound coincides with this horizontal support area. Both of them found roughly at 1263. So 1263, a nice downside target. I'll probably be booking the rest of my profits there, and unless, of course, gold accelerates to the downside and starts gaining a lot of momentum, in which case I'll hold it and expect to book more profits lower. Now, silver has not been confirming this move to the downside, as you see, because while gold has been breaking below 1280, silver has actually been rebounding from this 1480, 1490 zone, despite seeing this, like, in quotes, little flash crash that we had here. We've gotten used to this type of moves from silver and gold. Not coincidentally, all of them happened to the downside. I don't remember when the last spike was to the upside. For some reason, all spikes in the metal seems to be to the downside, because for some weird reason, people keep dumping large quantities in the market at the worst possible time of the day, which is very suspicious activity. This is not a way to get rid of a position and get a good price. This is the worst way to do it. So who knows? So silver is not confirming the move to the downside. So this is something that is a little bit troubling. I was expecting, as I said the day before yesterday, that probably gold, silver, and platinum would be confirming a breakdown at the same time, but platinum and silver are not confirming this move. Only gold is for the time being. So this is a reason to be a little bit skeptical for the move to the downside. Of course, I have no problem and no reason not to hold the rest of my position, because I'm in the money. But for somebody that would want to trade that breakdown from 1280, that would be a reason to rethink it. Okay, so if I had no position and my intention was to sell a breakdown from 1280, I think that this would probably taper my enthusiasm. Now, the biggest thing to talk about today, because they're nicely correlated with each other frequently, and it's a pair of figures that's worth monitoring in conjunction with each other, is what's happening with the Aussie USD and copper. So copper has had several false starts in breaking through this resistance zone. You can even view this as a triangle to the upside. It's making another attempt today. Now, what makes me think that this might actually be the time that it's going to manage to do so is the fact that if you have a look at the daily chart, for example, for the Aussie USD, Aussie is actually attempting a break higher from this triangle. We were attempting to do so during this last 4 or 5 trading days. Today we seem to be doing it. Of course, it's still early on the day, but we're getting close to actually confirming something like that. Keep in mind that the 200 daily moving average is also here at 72. So a break above 72 cents is going to confirm that Aussie USD, at least in the short term, is breaking higher. And as you see, copper at the same time is attempting to do the same. In fact, if you look at the 4-hour RSI, this has also been breaking higher from this trendline resistance. So I think that there's a decent possibility that once we confirm, of course, it's not coincidental, right? We had the good Chinese data that Blake and Stage talked about. So obviously that's the reason behind the fundamental reason behind this move. But I do think that if we confirm this breakout today for both those pairs, I think that we should start looking higher for both of them. If you remember, copper to the upside was one of my trade ideas on Real Vision. So it has taken some time for it to manifest, but it might be doing so now. So Aussie, copper, nice combination. One breaking higher will probably confirm the other one doing the same. Question about Aussie yen. Sure. Aussie yen actually behaved exactly as expected. This is what we drew several days ago, that we might see a rejection from that trend line, a retest of this breakout area, and a move higher. We didn't, retrace as much as to retesting this 79.60 area, but we retraced a decent amount to that area. And now Change color to this, so we don't get confused. And now we're attempting to break above this channel. So that's definitely going to be a bullish development that is also going to be pointing higher. So in essence, Aussie yen is about to confirm another pair, Aussie pair that seems to be breaking higher. Now, if since we've been talking about the Aussie pairs quite a lot, why not we can also have a look at some other Aussie crosses. One of them is the Euro Aussie, once again attempting to break down from this rectangle support at 157, so 157, 157.20. So interesting to monitor this. What's going to happen from here? It looks very weak. Every rebound is weaker than the previous one. So the price action is actually showing that a breakdown is very, very likely. A move that has already manifested in the pound Aussie. If you remember, we talked about the pound Aussie, I think it was yesterday. I said that, if you want to be long the pound Aussie, this is the place to do it because the risk reward is appealing. But if we do break down from this wedge, then that's going to be quite a bearish development and you don't want to be long anymore. So this is exactly what happened. I mean, we didn't break higher. So what happened is that we broke lower, and this is a bearish development. There's no question about it. Keep in mind that we've had several signals that this pair is turning. We were trading in an ascending channel. That channel broke down. Before that, we had a possible diamond reversal formation, which this also took place. And now we have a wedge that instead of being a descending wedge that breaks higher, breaks to the downside. So pound Aussie, looks quite weak. So as you see, Aussie looks quite strong at the moment against the vast majority of the pairs. Now, also Aussie Kiwi, no need to say much here. Blake already covered it, but we had another acceleration to the upside. So, I told you that we need to respect the upside. Keep in mind that so far we got rejected from the 50% fib from this last move lower. So, we might see like a deeper retracement, but in any case, I would expect 1.062, 1.063 to act as support from this point on. So, that's, I think, a good recap of what's happening with Aussie pairs. Two questions about USD Swiss. One about USD Yen. Let's have a look at them. So USD Swiss. USD Swiss, the price action was actually making me be very interested to being short. Of course, that's why we use confirmation. And for me, as I had said multiple times, confirmation for a short position here would be a breakdown from parity. Why? Because parity is a nice support resistance level here, is also psychological level. And when I mentioned that, it was also confluencing with this ascending channels support. Now, I got a little bit surprised, not a lot, because Euro USD was not looking, to be honest, good. As I said, Euro USD, as long as it remains within that wedge, you have to respect the downside. Only if we break above that descending wedge, we can start talking about bullish scenarios. And then, it will be actually interesting to talk about bullish scenarios because the market is rather short. So once we start getting squeezed in Euro USD, we might see, a move bigger than the market expects. But until that happens, we do need to respect the downside. So not that surprising, but I would have wanted to see a breakdown from USD Swiss because I would have actually taken that trade. Now, instead of that happening, we actually broke above this ascending channel. We now seem to be consolidating on the top of this channel, which opens the possibility for another push higher to retest this conjunction zone at 1.012. As you see, this has already been an attempt of a double top. If we see a third retest of that area, it might not hold. I mean, you don't see every day like triple tops or quadruple tops. So regardless, it should be considered, a major resistance. So there's no question about it. Buying near 1.012 doesn't make much sense. Now you want to trade it, you either short against that level if we get close to it, or you wait for a break higher and you buy the breakout. So no real development here with USD Swiss, as we have not had any real development with Euro USD. It's still where you left it. I mean, within which what is likely a descending wedge. But as you see, descending wedges can also break to the downside, in which case it's a very bearish signal. So, as long as we hold between, as I said yesterday, 111.80 and 113.50 in Euro USD, there is really nothing to do here, and there's no reason for you to pursue any positions. Now, having to do with the question that we had about USD yen, first of all, looking at the longer term picture, there is no reason for anybody to be anything but neutral, right? Why? Because we've been trading within this symmetrical triangle since summer 2015. So it's almost 4 years, actually in like 2 months, it's going to be 4 years that we will have spent within the symmetrical triangle. So, in the medium to long term, as long as this symmetrical triangle is holding, you have absolutely no reason to commit to one side or the other. Now, looking at it in the shorter term, bullish case scenario, we are attempting to break above this previous high. On the other hand, we're retesting this previous channel support as resistance. It held before. It might be holding once again. Now, the short-term price action here that does look bullish, I have to admit, because in essence we have stalled, but the pair is refusing to turn lower. Now, if we have a look at it in the shorter in a shorter time frame, the 4-hour chart, you can see that we were within a channel. Now we're within another channel. So obviously, not in a rush to go anywhere fast. Now our friend here says that he bought it because he likes an inverted head and shoulders formation here. I'm assuming that this is the one he's referring to. In which case, yes, we have broken above the trend line. Regardless, I'm not that convinced. Okay. And one of the reasons I don't like this trade so much is that because even if we break above that, going back to the daily, as you see a little bit higher, like 70 pips higher, we find that major, like 4-year trend line I was referring to. So even if we break higher, of course, it depends on your time frame. I mean, if you like to short, like if you are like a day trader, and for you a target is like 50 pips higher, yeah, sure, it's a decent trade. But for me, I usually like to catch bigger moves. So if I wanted to be long here, 70 pips higher, we have this major resistance. So that's a level I wouldn't want to be long against. I would rather buy a breakout than buying a retest, hoping that after 4 years, this is going to be the time that it's the market is going to successfully breach that trend line. Did I understand you right when you said while gold is going towards 1265, silver is not showing weakness? It's not confirming the breakdown, yes. Therefore, we may have reached the limits in gold drop. I actually said, Hamid, that if I was not short gold from much higher levels, I'm short from like 1310, and I was just looking to buy a breakdown from the 1280 area, I would be troubled by the fact that the other two markets that were actually, the other two metals that were actually testing support, platinum and silver, have not managed to breach their equivalent supports. This is a divergence, of correlated markets, and usually I don't like to see that. So yes, if I actually was looking to buy the breakdown, which means that I would be, just in the money, I mean, more or less break even, that would be something that would act as an alarm to me. So I would be much, much more cautious with managing that position. That's what I said, yes. Crude. We have a question for crude. No surprise there. People love crude. So I think we would rather go directly to the 4-hour chart for crude. I think that crude is more or less confirming. Copper, by the way, still pushing higher. I like this. I like it very much. So here's crude. I said yesterday that crude looks bullish to me. That's why I booked, half of my short position in the money. I'm still looking to be short crude, but from higher levels, because this price action is definitely not bearish. Okay, so we're once again retesting these previous highs, as you can see. And for every time we're pushing higher, especially since we've managed to have no follow through to the downside, the higher the chances that we will actually finally break above this 64.70 area and attempt to move towards the next objective, which is $66. So I think that crude is looking quite bullish in the short term. As I said before, this does not change my outlook that even if we have one more move to the upside, I think that crude is going to be a decent opportunity to short for a much, much deeper correction, which we haven't seen in a long time, right? So we've been moving higher without any real correction. As you see, after we got that inverted head and shoulders formation, if only I knew that it would move that much. I mean, I made like 10% of a move from being long crude, and I thought that was an amazing trade. If only I knew that it would move 50% higher. So after this inverted head and shoulders formation here, as you see, crude has only been moving in two modes: bullish and horizontal consolidation, right? Like bullish, horizontal consolidation, 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 bullish, horizontal consolidation. So no real big retracement to give the ability to somebody to enter long. I think that this is going to prove to be unsustainable. I don't think this can keep on happening much more. I think perhaps another push towards the 66 area is going to be enough for crude to then produce some kind of a deeper retracement that will likely coincide with some bigger correction in stocks. We all know the strong correlation between risk, assets, and crude. So that's what I think about crude. So I gave you, my short-term and my medium-term outlook for it. Could you tell your opinion about Euro-Swiss? Yeah, absolutely. I mentioned Euro-Swiss yesterday as well, and we can have a look at it once again. Euro-Swiss actually overshooting this, this ascending wedge. We can actually perhaps redraw this. This is on the 4-hour chart, and then I'm going to show it to you on the daily. So let's see if this actually channels. So if we delete this, drag this, do we have anything? Yeah, there it is. So quite a nice move higher. It shouldn't be coming as a surprise to you. We mentioned before that, several days ago that it was testing support, and actually that support held. Let me show you now on the daily chart. There it is. So be a little bit careful here. Why? For three reasons. Reason number one is we're testing this trend line resistance. Reason number two, as you saw on the 4-hour chart, we are at an ascending channels resistance. Reason number three, even if we move a little bit higher, strong horizontal resistance, just like 35, 40 pips higher, which means that there is really no risk reward for somebody to be long here one way or another. Now, if you want to be short, I think you know where your risk is. It's above this horizontal resistance area. And I think it might be a decent opportunity because this is a pair that has gotten used to spending time in ranges. and why not? It might get rejected once again, and keep consolidating in this 111.80, 114.30 area. Okay, 350 bips. So that's what I think. 280 bips actually. So it is what it is, and this is how you trade this, in my opinion. Aussie,
How about
Swiss?
Steve? How are you, buddy?
Yeah, I'm good, Coach. How have you been?
Good. I'd be interested. Can I ask you a question?
As many as you wish.
Just one. I'm interested in your view on yields right now, as they've been
Absolutely.
climbing.
I will cover both yields, bonds, and treasuries.
Okay.
Once
Cool.
I answer this question, we had a question about Aussie, Swiss, and actually not a bad pair from a technical perspective, as you see. So I have a question about it, and I think it's looking rather interesting. First of all, I expected continuation when we broke lower from here, which happened. So this was clearly a triangle. We broke down, we came up, we retested this previous triangle's resistance. We moved lower once again. Now, if you look at the shorter term chart here, several interesting things to monitor. One of them is this trend line. So one of them is this trend line resistance, which we're currently breaking above. So that's one. Second one is this can prove to be an inverted head and shoulders formation, right? Not the most beautiful one I've seen, I admit to that. But, irrespective of that, we are already seeing a bullish move. We had one move higher, a corrective consolidation. Let me show you. This was clearly a corrective consolidation, okay? Corrective consolidation here. And at least one more leg higher should follow. So I think it looks good for the time being for at least a retest of the confluence of the previous triangles, trend lines that more or less, meet each other in a few days. So I think Aussie Swiss not bad looking for more upside. Of course, it would be ideal if we had a look at it earlier, because then you could catch that breakout from this clearly corrected move here. So that's what I think about Aussie Swiss. Peter says chart is showing a short from 75.19 Kiwi yen. Let's have a look at the Kiwi yen and see what you're talking about. Kiwi yen remains weaker, of course, than the Aussie yen. That's why I had chosen to be short Kiwi yen. I'm not short anymore. I booked my profits on that rebound. I had trailed my stop loss. We had this spike overnight. So far, this is a consolidation. Your comment is short against 75.19. Against 75.19. Why against 75.19? Anyhow, this is like a horizontal consolidation. I won't be doing anything with it. Definitely, if we break below, I can tell you that if we break below 74.80, that's going to be a bearish development, and we should see a continuation lower. That's all I can tell you about it. View on Euro Kiwi. So last thing I'm going to look at is Euro Kiwi, and then have a look at the bonds as coach requested. So Euro Kiwi, nice breakout from that channel. We had spoken about it on time. We had this spike. So far, getting rejected from the 61.8. I would be a little bit careful here, but keep in mind that as long as we remain above 166, you should respect the potential for more upside. So I think, neutral to bullish is my outlook for it. Now, having to do with bonds, coach, this is actually interesting because the bonds are in a rectangle. Okay, so having to do with the bonds, watch closely this range 163.70 to 166.70. I think a breakout either to the upside or to the downside should bring continuation. We should respect, of course, the possibility of a break higher. For the reasons I've explained multiple times. The bulls have already broken out from a multi-year corrective move. So that means that as long as we remain above 162.60, we should respect the bullish potential more than anything else. And last but not least, treasuries. Treasuries, coach, likely, this is what I saw back then, likely on an ABC move. We are approaching a very, very key area of support at 122.5. So be careful here. We're getting very, very close to support. And now if we have a look at the yields, which are, of course, inversely correlated, we might also be seeing an ABC move in the yields higher. So be careful because we might get rejected anywhere between here and 265. Now, obviously, if that happens, if this proves to be indeed an ABC correction in yields or treasuries, one to the upside, one to the downside, I would be careful because that might also point to a reversal in risk assets. Okay, coach.
Yes, buddy. Great analysis.
Okay, is your guest
Thank
here?
you very much. I'm going to ask Nargis, if you're here, can you please put a question in the question box? It's time for the interview. I thought I saw you a couple of minutes ago. Oh, NM Web. Got you. Yes, Steve, so we could go ahead.
Okay, perfect. Enjoy the interview and see you all tomorrow.
Okay, bro. NM. Let me just try it here. It's not coming up. NM Web. Oh, there you are. You really are a detective. So.
You want me to help? I found her.
Yeah, I'm not able to make her a presenter. It looks like she did what another guest did. It's NM Web.
Oh yeah, it's through web. First of all, I'm unmuting, so we should be able to. Can you hear us?
Hello.
Hi, Nargis.
Hello, we can hear you.
Oh, hi. Good morning.
Good morning.
How are you guys?
Good. How
Good
are
morning.
you? So, can you share your screen?
No.
The drop-down menu.
I don't think, in order for you to share your screen. So if you want to share your screen, you have to actually use the GoToWebinar application that will allow you to share a screen.
Like last time, Nargis.
Yeah, I did. I did that, and somehow it says it failed to launch, or I don't know. It just opened this one. Should I log out and go back in?
Yeah, because without visuals,
without that, we can only hear you. We can't. We can see
your charts. See what you're looking at.
So I'll just open the link which is in the email, right?
Yeah, that should actually launch the GoToWebinar application, and that then will allow you to have a lot more options like sharing your screen.
This somehow is not opening the application. I don't know why.
It did last time, Nargis. There were no.
Yeah.
issues.
So did it open?
Because I know last time we were on, we were looking at your charts.
Can you see? Is it different now?
No. Why don't you let's try this. Log out, leave, and come back in through the link that I'm going to send you right now on Twitter. Okay?
Okay. Let me do that.
Let's try that. So you have to log out. I'm still hearing you.
Oh, I see you. I see you. I momentarily saw you on a second account, the NM.
Okay.
That's what I.
But now it has disappeared.
Okay, she's
Okay,
left.
she logged out now. Yes, so
Yeah.
she's probably coming through that. Okay, Coach, any other requests? As long as we're here and we're waiting for her to log back.
Well, we could ask the crowd. How about S&Ps up here? Did you cover them? Okay, this is Nargis again.
Yeah. Let me. Oh yeah, here it is. Making her the presenter. There we go.
Thank you, Steve.
Let's see.
You
Okay.
Renaissance man.
Can you hear us now?
Hi. Good morning.
Perfect. And now we can
Good
see your
morning.
screen as well. Okay. Perfect.
Okay, see.
Can you see now? Is it okay?
Uh-huh.
Yeah. We can see the screen that has your Twitter feed.
Okay. Got it. How do I minimize this? Okay.
You just you have a choice of which screen to show.
Okay.
Okay, so we're going to be using Twitter charts? No. Oh,
Yeah,
we
no,
are,
I just
guess.
had something for reference, so
Oh, okay. All right.
Yeah.
All right. So Nargis, welcome
yes.
back.
Yeah, thank you so much for having me again.
Did your husband's alarms all three go off this morning?
Oh yeah, he's right here all awake and this thing, and
you're so fortunate to have moral support like that. You need it in this business, don't you? So Nargis has been with us before. She's an excellent technician. I follow her on Twitter. Recommend you follow her. And her Twitter handle is at Nargis007 because she's a technical detective in the market. And I want to ask you on this case, being a detective, after we put in the low in December, this rally far exceeded my expectations. You know, I was trying to short it at 61.8, 78.6, and here we are, just a stone's throw away from new highs in the spider and the SPX. Did this rally exceed your expectations as well?
I think it exceeded everyone's expectations. Actually, generally, what I see is, or what I try to follow is, whenever there is a correction or some happening price below 55, we generally see an ABC, right? And then that price shoots up to 1618 or some retracement, and then you expect some pullback. And then it builds up that torque, that trampoline jump, which I call, to push you higher. But here we just got a shallow ABC, like it only did this is only 38% from here.
Right.
And then it went and it never stopped. So I was wondering why it is causing this, or you're thinking like, what's happening? So then I got the answer, or at least my thoughts, maybe not the answer, but some thinking.
Okay.
So I mean, you could go to SPY as well. Both charts are same.
Right.
So this is ES, right?
Yes.
And last time when we talked, we said, see, this is so over bloated and it needed to come down. And it did. It went back again in January, made a new high, trapped everyone right here, and then boom. In two single candles, it was down to 500 points down from 2800 to 2300. And what I have learned is the momentum. Look at this momentum. Monthly candle, two big candles, 500 points done in a 2 months time frame. So this momentum, it was too sharp, and it went back up with the same momentum, 100% retracement.
Okay, so you're saying your technical rationale for this type of rally was kind of a yin yang of the intensity of the sell-off equals the intensity of the rally recovery.
Yes. So
it's not always that way, though. You could have an intense rally, a parabolic move either way, or and not have you could have dead cat bounces. off
Yes,
moves like that, right?
that is true. That is true, and we can see that also. See this intense rally in Netflix, but it did not come back to 100% retracement. That happens, but I don't know. This is the market, and
Right.
people don't like to be trapped or something. But this is something I found to at least explain myself.
Okay.
And this is we got, and right now we are just hovering at 20 points less, maybe 20-25 points away to the 100% retracement, and that is where we can have a knee-jerk reaction, maybe for a short time, I don't know. But what I was trying to show you was this is something which I had done after the Jan 2018. So I was looking at the chart, and I could show you here monthly chart of SPY. And this is what I follow personally, or I've been taught to follow is, this is better because it has my 55 EMA here. See this red line, this is my 55 EMA.
Yeah.
And price is moving in waves. So by this 2018, this had completed a third wave, and this according to me was the fourth wave going on.
Okay.
And
where did you learn Elliott?
This is not Elliott. This
Okay,
is
well,
nowhere
you're calling
Elliott. This is just simple.
wave.
Yeah, this is a simple representation of the swings done on the 55 EMA. Basically, Elliott is very, very deep, and I'll lose myself finding the waves.
Yeah, my head explodes too. Go ahead.
Yeah. So yes. So on a simplistic, very, very simplistic notion, price somewhere comes down to 55 EMA and either does 3 or does 5 waves. By the time it does 3, the price is already very tired. But this is like we are going on for a long time, and this was the fourth wave, and I was here somewhere. That's why I have this curve instead of right here. This should be right here like this. So this was here, we were here somewhere in January. This was somewhere January here, and then we got a move and boom. That's why I was printing 2316 on Twitter, that this is where the price is heading, and that's where that number came from. Price landed at 55 EMA, and then boom, it went, it bounced from there. So this completed the fourth wave, and this is the impulse we are getting now. So now this impulse can be any percentage of from this high to low, or it can even make a new high pointing to 3,000, 3,100 as well. That would be, bringing everyone on board that this is the most bullish market, and then probably, then probably just, spike down, and price can trade below 55 EMA, forming these waves on the reverse side. So that can happen.
Mm-hmm.
Yeah, so that is one analysis I have.
I know for someone not doing Elliott, you say things like impulsive, which is an Elliott term. You say wave 5, which is an Elliott term. So, admit it or not, you're integrating some Elliott into your work, right?
You can say that, but it's nowhere near the calculation. It's very, very simple, price returning to 55 EMA, that's all I do.
Do you know why R.N. Elliott, every time he was walking down the street, waved at everybody?
No.
Because he was impulsive.
Oh, really?
But thank God his wife was corrective.
Oh, okay.
Okay, anyway, that's an Elliott joke.
Okay.
Okay, so are the S&Ps your major instrument that you focus on?
Yes, that's my market to see the health of what is happening.
Okay, and is it, so you trade both SPYs, and then do you look under the surface at different sectors within the market, or any commodity markets, or are you just know the SPYs like the back of your hand, like pit traders that never leave the same ring?
Yes, this is something I do. SPY is like my health check, and every day I note down where the price is with respect to 10 SMA. Okay, so every day around 12:40 or so, I will note down the price. Okay, today my price is here. So this is my price. So today my price is here, and my 10 SMA is here. So every day I just note down, this
Okay.
day did. So that just gives me an average of where the price is going and how it is behaving.
Okay.
So from here, by the time the price came up above 10 SMA to somewhere here, I think it was 44 days.
Okay.
SPY had spent above 10 SMA, and that was a very, very long time. And I was seeing the pressure build that it hasn't relaxed at all. But then we got this a very, very shallow
Yeah.
pullback. All pullbacks are like 1 day, 1 day move down, and 3 days approximately sideways. 1 day move down, or at least here it was 3 days, and then it's not ready to give in at all.
Okay. So what do you say to your followers that were spectators rather than participating in this rally, and they want to know if they should get long here since you're looking for over 3,000? What would you tell your followers with the market in its current position?
I would at least not do anything until it decides what it wants to, because it's right there at the all-time high, right? 29.47. So we can have a knee-jerk reaction. So either some kind of reaction we
Maybe
can
back to 280.
280. It's
Get
possible.
your red line there.
Yeah, it's possible. This is 55 EMA. It's possible that it can have some knee-jerk reaction, come down, or maybe just right now it's just very, very slowly. It's not even rushing. The price is being very, very smart, and all moves happen overnight. It just goes slightly above and then spends 2-3 days in that range, and then makes another move of 10 points up. So it's very, very, I don't know, methodical maybe.
Okay, so the overnight moves, is it based upon everyone very focused on Chinese fundamental economic numbers?
Maybe we can give that as an excuse, but
Okay.
I don't think this is anybody.
Why do you think that these moves are happening overnight rather than? And I've seen plenty of moves during the U.S. session too. But why do you think we're getting a lot of moves overnight? And it's okay to say I don't know. Okay.
Yeah, I mean, it's I mean, I personally don't think it's. Yeah, I don't know. I don't know why it happens.
See how hard that was to do?
Yeah.
You feel uncomfortable saying I don't know, don't you?
No, it's not that. I just didn't want to say something stupid.
Most people do. You know why? Because they feel like, oh, well, I should know. And we can know everything. And they feel like they're not smart if they don't know. But you know what? It is smart to admit when you don't know, don't you think?
Yeah, okay.
All right. Anyway, that's a little mentoring. So take the pressure off. So but with the S&Ps here, and you wouldn't do anything, what do you do during the day? It looks like you've been long for a long time and you're holding. Do you protect your positions? Are you long in protecting your positions with stops? And are you a believer in taking partial profits when you have windfalls?
Yes, I do. I definitely believe in taking partial profits in generally 1/3. When it moves to a certain point, you take half off, or you take 1/3 off, and then have bring up the stops basically. So suppose I'm entering above 10 SMA here, then my stop would be below somewhere here, and then as the price moves, I bring up my stops to break even, then above 10 SMA, and then finally when I know it is reaching my target or whatever extension I had in mind, say 1618 here, then either I would exit or book all the profit, or put a stop below 5 SMA for my remaining position or whatever position I have left. So just trying to lock in as much as possible.
Do you ever trade counter trend? I mean, you can't argue this is an uptrend.
Yes.
You trade counter trend.
Oh yes, all the time. Basically, generally all that happen at 30 minutes to 2 hours. Any kind of setup, right? So if price has gone up, a lot, and then we know that at least I know that sometime the price is going to return to 55 EMA on 30 minutes or 2 hours. Then then when it shows the sign, you go. I take a shot and then let the price come here. So that would be either a day scalp or maybe an overnight, and the reverse is also true. Price moves
Okay.
up, and then you take it, go up, and then you book the price. So
You see anything at before the high, say at 29? Oh, these are the SPYs, but the SPX around 29.25. Anything like that? That'd be about, I don't know, 20 pips short of all-time highs, 20 handles.
Yeah. I think for ES I had the number 20. Yeah, I had the number 20. Yes,
17 and
29.
44.
Yeah, 29.70
Okay.
is where I was saying it is struggling with.
Okay.
It's struggling to get over with. So once it crosses 29.17 and it's trading above that, then we know it has a higher chance to hit 29.47. Yeah, the number was coming at 44, but 47 is right there. And
Okay.
as long as price is trading above 29.12 here, it is good to hit until here. So 29.54. So
Okay.
earlier the price was struggling here, 28.90, and then it spent some time, trying to overcome that, and now it is up above that. So this is the range I had, 29.90 to 29.54 based on, and then you have some smaller. So once this crosses 29.17, we have a good chance, a very, very good chance of hitting the all-time high and maybe some more, overshoot to somewhere here,
Okay.
probably get some reaction. I don't know what kind of reaction or severe reaction we can get. It can just breeze through and never stop.
Where was that you posted that? What is that?
On Twitter.
Oh, that was your Twitter feed that you were just showing?
Yes.
Oh,
So
okay.
on my
It
Twitter.
just looked different. It just looked different to me.
Yeah. That I had just noted down for you to my talking points, basically.
Okay.
That's all. So here, my ES feed would be here.
Do you follow, even though you mainly trade the SPY, do you pay attention to the dollar and rates and outside markets at all, or?
Yes, I do. I do keep in mind what's happening, because all of this matters. Because at one point they were very, very closely correlated, but somewhere you see a little bit of I don't know. You may be the best person to answer that, if the correlation is still 100% there or not, because you're the best guy. You trade everything, so maybe you can tell us whether. I know that with this TLT had gone up. It had broken out around 121, shot to 125, then it's back down, possibly retesting back the breakout area here.
Yeah.
And the indices are up, so at least that correlation is there. Dollar, I mean, you are the best guy to talk about it, not me.
Well, I think the market prefers a weaker dollar.
Okay.
For multinationals exports, I mean, the currency wars have been all about depreciating your currencies so you have an edge exporting.
Okay.
So, okay.
Yeah.
So, I think actually once we have a breakout over 97.80, if we have a breakout, that will not be a positive force for risk. It may even happen because, it's a tail wagging the dog. So let me ask you, you trade your own account and you're active on Twitter.
Yes.
You're not in the business. You just share your ideas. What do you get out of interacting on social media and sharing your work? Does it make you more accountable because you're actually putting it down and sharing it? Are you looking to serve other traders by sharing your work? Give us your belief system on, since you don't have an axe to grind, you don't have a business model, right? It's just trading. So why do you do this, and why decide to do an interview like this?
As you know this, first of all, trading is a very, very lonely business, right? You're on your own and married to your screen, and that's all you do. So, and specifically, I've left my job, so I'm like stuck in my house in my pajamas, staring at the screen. So,
I know.
it becomes difficult. I mean, you become completely fall off the social radar, and you after some time you forget how to talk to people. So
Yeah, especially if you're a millennial and you're used to texting and conversations are, too much trouble.
Yes.
Well, okay, so it's a great reason because you're right, and you probably hang out during the day with do you hang out with a group of people that you interact with more frequently than others, and that gives you kind of a sounding board for your own ideas. How many people do you say you interact with during the day? It would be like your little community.
Yes, yes. So actually, what happened was then I started, I found out Twitter and I was posting there and here, and a lot of my friends and my colleagues found out that I was doing that, and they asking me like, oh, hey, what is this stock doing? What's happening here? I have this, I have that. Should I buy this? So all that started, and then a lot of my friends said, make a WhatsApp group and interact with us and teach us and show us what is going on. So I thought, okay, fine, let me do that. And then suddenly it grew a lot. They called their friends and this and that, and that. Now we have an active group where we just talk about what's happening, stocks. I post my trades and all, and
And I
completely.
bet there are things that your little community sees that you don't see on your own that embellishes you. Does that happen for you?
Yes, definitely. And I learn a lot in return, because yes, as you said, you become more accountable for your things. You're more serious, you're more responsible. All those things come, and plus, I've learned a lot of patience and dealing with people. Being nice, teaching others.
Well, you know what? I think that you're like all of us. You're ahead of me. You've mastered being nice, Nargis, and that's why besides the fact that you're a skilled trader and a disciplined trader, which is really the key to making it. And as just like Tiger Woods was persevered through, I'd call him like a trader who had a 10-digit account that then went through some difficult times and had to trade small, and then maybe went through a divorce like Tiger did, and he really had emotional problems, and then from the stress of the emotional problems and his sport, athletics, his body breaks down, and he didn't even know if he would ever be able to play again, but he never gave up and persevered, and people have written him off. So the lesson I want to share with you is don't listen to those voices, and even your own, when you're going through a dry period, and persevere, Nargis. There's no doubt in my mind you're going to be and continue to be a successful trader, and it's really a pleasure to know you. I'm glad our paths crossed on Twitter and that pips rained down on you this spring, and you have a great harvest going into the summer months.
Thank you so much, and thanks for the great advice. Yes, this is something where you play with real money. All your emotions are 100% charged, and in the thick of the things, it's very easy to make mistakes. And I've done that of my share, and I still do, because
Right.
discipline is something, is like an everyday thing, not something you master at.
Right.
So I do struggle with.
We learn the most from our mistakes, even when we repeat them. Sometimes we have to, till we finally. Yeah. Someone said to me, Nargis, Dale, how many times do you have to get hit in the head with a ball-peen hammer to know it hurts?
I know, and I would be something who'll hit it on my head myself.
And I must have been I still get it still hurts. Anyway, Nargis, a really pleasure talking to you. People follow Nargis on Twitter. Maybe you could start exchanging some ideas with her, and her Twitter handle is Nargis. Go ahead, give it to the crowd.
Yes, it's right here, Nargis007.
Okay. Well, I'll tell you what, Mrs. James Bond, it was great talking to you again, and good luck in Wave 5, and let's keep in touch and catch it together. What do you say?
Definitely, 100%. I follow you and I see your posts, and it's a learning thing. I mean, it's a fortunate thing to be caught with good people early on. Otherwise, it's very easy to go anywhere.
Yeah, definitely use your discernment, people. and also, Nargis, what do you think of this? That people kind of want to know right away and have immediate gratification and judge maybe a little bit too early. I think you have to give something, at least if you're judging a trader, judging an analyst, a service, at least 90 days to make a realistic assessment. Do you agree with that time frame?
Yes. Definitely, because it takes at least, as they say, 21 days to form a habit. So how can you? I mean, you went to school, you spent 16 years to get just come out of 12th grade or undergrad or whatever you call it. How can you expect to become something an expert overnight? Everybody thinks trading is an overnight business, but it is
My
not.
average answer is 4 years. What would yours be before you started making breakthroughs?
Yes, definitely that long. I'm experiencing it. Some days I am very good. I become methodical. I discipline everything, and then one day I would just crap out.
Yeah,
So,
I know. Okay. All right. Well, good hunting, Nargis. And
too.
thanks for being with us again. And we'll do this again down the road. Maybe we'll get back together. Ping me when you think 5 is completing.
Yes.
Or if you think that there's a sharp pullback, which I'm expecting soon, actually before we make new highs, a sharp pullback, then new highs. So we'll see how it all plays out. And,
Yes, definitely. 29.30, 29.25, 30 to 44 area is where I had my eyes on, and maybe you are. Let's come on, get it done it today.
Yeah, watch that full moon on Friday, okay?
Oh yeah, definitely. Full moon
All
is
right.
there.
You and your husband could have a romantic evening under the full moon as the S&Ps and crude oil peak.
Are
All
going
right?
down. Yes, thank you so much.
All right, Nargis. Adios.
You too. Have a nice day. Adios.
You too. Okay, everyone, that's a wrap. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Good hunting the rest of the day. Why don't you go join Blake and the guys? You're very welcome, Alina. Go and join Blake and the team in members chat. See everyone tomorrow.